welcome along to the Property Academy podcast by Obus Partners. I'm your host, Andrew Nicol. And so on the show, we're talking about what Andrew Nicol bought in 2022. And I'll tell you something interesting. I sat Andrew down the other day, and this was for the New Zealand Property Investor magazine, which is proudly part of the Opus Group. And we were doing an article revisiting all of the people that were featured in the magazine over the last 12 months. And so I sat Andrew down and we were talking about, well, what have you actually bought this year? Which is funny because we don't actually sit down and talk about, oh, Andrew's buying this or I'm buying that. It just happens, and then sometimes it randomly comes up. And I suddenly thought we should actually talk about what you've bought over the last 12 months because you've been pretty active.
I'm usually, the problem is I don't even think about it myself nowadays. So it's just a terrible thing to say. But if I see something I think that's a good deal, I'll sign up for it.
So we're going to show you some of the actual properties that Andrew's invested in this year, run some of the numbers on them. But just before we do this, give us a timeline. What have you bought over the year? How many, and kind of what periods or months throughout the year have you taken action?
I settled a few in the first quarter of this year. I settled a few, so they were under construction builds, and so I signed up for them previously. They came up for completion. I bought them.
How many's a few?
Three, I think.
Yep, so 3 early this year?
Yeah, I think there was one in June, but I can't be certain on that. I just seem to remember having to go to my lawyers around my birthday, and there was one last month.
You're outrageous. Can't remember.
I remember going to my lawyers. It was quite stressful.
Yeah, settled 5 properties this year. Can't remember when. And how many would you say you've signed contracts on this year?
I know that I did 2 because I just had to pay a couple of deposits, and then there's another 2 that I'm about to sign up for this week.
Okay, so this year, even while the property market is declining and has declined by about 12.5% from the peak in November 2021 through to we're now sitting here in December 2022, you're still settling 5 properties and signing contracts to purchase 4 new properties. Mm-hmm. Okay, so why have you continued to invest while the market's falling?
Because I've invested for 20 years and this market doesn't scare me. There's always a good time and a bad time to buy, and you don't know until it's gone. So you just put down deposits on properties and you wait for them to finish and you buy them and rent them out.
So what month did you sign up those 2 extra properties this year?
A couple of months ago.
So probably talking June.
No, a couple of months ago by October, I would have thought.
Okay. Well, a couple of months means different things to different people.
Couple of months, October.
No. We could go with October.
Maybe September.
Okay. Wait, was it October or September, Andrew Nicol?
I don't know. One of those months.
Okay, but even since then, prices have continued to fall. Is that?
Yeah, I think that's fair, but I think I bought at fair rates. I bought at discounted rates. The prices had already been negotiated. They've been negotiated by me. I negotiated them for any of our clients, so I got the same deal. It was great.
But did you ever stop to think, well, maybe I should just wait and maybe get a better price in a couple of months?
No, I don't think.
Why
like
not?
That. Just because I just don't think like that. No, they haven't come down since then. The prices haven't come down. Remember, developers have to discount their prices faster than a normal consumer because they've got to sell their product. Consumers can sit on their hands if they want to for a wee bit longer.
Okay, so let's actually pull up some of these packs and properties. And for you guys on YouTube, you guys are going to be able to see this. For you guys on the podcast, listening to the audio version, we'll describe them. Which one do you want to pull up?
Go to Walmsley first, because this was one that I think we actually showed in a webinar, and I said this is going to be a great investment for people. This was one in Favona, in Mangere, in Auckland, which is an area that I love because it's close to the airport, it's close to the CBD, and this is a block of, I think it was 60 units in total. What I liked about these is they're 3-story townhouses. On the top floor, you've got 2 bedrooms and you've got a shared bathroom. On the middle floor, you've got a bedroom, a bathroom, then you've got what's called a flexi room. Now, if you're looking at this on YouTube, this is a room without a door. That's the only difference. So you kind of get this bonus room, which could be used as a study, it could be used as a theatre room, it could be used as a kid's room, or you could probably put a door on it and call it another bedroom.
Well, you couldn't put another door on it because to get up the stairs, people have to walk around and go back up.
No, Edward. Look at that. They go up the stairs.
Yeah, so they come up, and then they turn around and they come through the door, and then they go back up the next stairs to get up here.
Oh yeah, okay, yeah, very good point. Okay, well you could put you could still put a door on there though.
Where are you going to put the door?
You put 2 doors. You put one there and there.
Yeah, so you'd carve some of it out.
Yeah,
Okay,
yeah.
fair call.
Okay, but look, the way I looked at this is after being in lockdown and setting up an extensive home office, probably everyone did, I kind of thought, well, actually there's a need for an extra room for most people now. People want to know that they've got a desk at home and a printer at home in case they have to go on lockdown again, or just if they are working from home a lot more. So I think there's some really good opportunity there. Now, what this does for your rent, though, is gives you a really good yield for what is essentially a growth product. So this is a townhouse, so it's a growth product, but it is getting a really, really good rental return. I think I did the numbers on $7.25 a week rent when I did my return on investment calculator. This was one of the highest return on investments we saw this year.
Now, are you basing that on the rent for a 4-bedroom or a 3-bedroom?
3-bedroom.
Okay, interesting. And actually, before we go through the numbers, what other ones do you want to look at?
I'll show you the two that I'm about to sign on. Remu Street. Now, these are the ones in Wellington. I'm actually meeting with these developers tomorrow to talk about this deal and get their sign-off for me buying one. The interesting thing about Wellington is I did not think that I would be recommending it quite so soon because it was overpriced. But then these properties have been so well negotiated, they're cheap. And I think you're buying well under market value.
So what are you going to pay for this?
$650,000.
And what's
$649,000 to be exact.
Yeah, so $650K. And what's your rent going to be on this?
I think I've worked on $650 a week rent. They've got rental assessments up towards $690. It feels a little high as gut feeling, so I've worked on $650, which is a gross 5% yield, so really strong yield. So what I like about this is the cash flow is really good, particularly when you're putting in a deposit like I do. Really nice looking units in Nainai, relatively small development. Well priced. I know that I'm probably not going to see a whole lot of capital growth in that in the next 5 years, but then when it takes off again, historically, this area's had Auckland growth rates.
So let me ask you this. How did you decide that this property here was the right one to add to your portfolio?
Well, I think because of the low entry level price for Wellington and the fact that Wellington is so landlocked and is really restrained when it comes to restricted when it comes to land, I kind of just think it's right timing now.
So is it just a gut feel for you?
Yeah, it's a gut feel. I mean, $650,000, you basically pay that for a townhouse in Christchurch. Why wouldn't you have something in Wellington?
Yeah, well, you would have probably about a year ago paid around that $650K.
And look, as terrible as this sounds, they're nice looking units.
And what was the process that you actually go through though to figure out, I'm going to buy this one, I'm not going to buy that one?
There was no process like that. I'm going to buy this one, and if I see something else I like, I'll buy that as well.
Honestly, I remember once seeing Michael Jackson, a doco about Michael Jackson, going through an art shop or some antique shop.
I don't like where this is going. You're comparing me to the king of Prince of Pop.
Yeah, the Prince of Pop and the Prince of Property. There are some striking similarities. And I remember seeing this documentary where he goes through and he'd point at things. I'll have that. And I'll have that, and I'll have that. And I've been shopping with you. I know you like that as well. And I feel like you almost...
Is this because of the fox I bought?
Yeah. It was a good-looking fox. And it feels like you take the same approach with property. You kind of look at it and point at that.
Yeah, look, I think you can run the risk of overthinking it. And look, I don't want this to sound like I just I'm flippant in my choices. I'm calculated in the sense that I know what works, and so why overthink it? Don't always think, oh well, I'm not going to buy this one. I'm going to wait for a better deal. Better deal never comes. Just buy the property and then figure out if another deal comes along. Figure out how to make that work as well.
Isn't that a bit easy for you to say as somebody who owns 30 properties and you know, has the money where you're able to say, I'll buy that one, I'll buy that one.
Sure, but you can't get to 30 properties without buying a property and then repeating that process. And people limit their own ability to grow a portfolio by just not doing anything.
Okay, let's go through the numbers, because I feel like we're going to get into an argument as we sometimes do. So we've put the numbers through our return on investment spreadsheet. And is this actually the spreadsheet you use when you're running the numbers for yourself?
Yeah, when I'm diligent enough to actually complete it, I remember, I use this for investors as well. So I have already done it for Walmsley and Ramu Street and Rangatira, which is a new one. I've done that for investors as well. So I already knew what the numbers were. I didn't do this when I was buying them because I already knew what the numbers worked out to be. But if I am buying something that I haven't run the numbers on for an investor, absolutely I use this.
So for anybody who hasn't seen this before, this is the standard spreadsheet that we use to analyse the cash flow for an investment property. We put in all of the costs, put in the mortgage, the rents, all of that good stuff. And then we look at the cash flow. So, Andrew, talk us through. Do you want to start on the cash flow graphs?
Yeah, let's talk about Walmsley. So the cash flow is really the only thing I care about. And again, I don't buy for cash flow, I buy for growth, but I need to know that it's affordable. Now, you'll notice that my cash flow is relatively good. That's because I have to, for the bank, put in a 30% cash deposit for anything I buy. But the cash flow is still pretty bad next year. Because we're working on a 7% interest rate, I still have to top up $300 a week for that property.
So that's the one, the 3-bedroom townhouse with the flexi room that you talked about before.
Yes.
So when the interest rate hits 7%, you're still going to have to top it up by $300 a week.
But here's the thing. I'm not making any contributions this year because I've just paid a deposit with cash. I paid the 10% deposit with cash. So my year one is no contribution. So if I'm diligent enough to put aside an extra $150 a week towards that one, then I don't have to increase my contribution. What's so funny about that?
Are you diligent enough to do
No,
that?
definitely not. But if I was, then next year I'd only have to make a $150 a week contribution. Then in year 3, it's $100 a week. So that's how you manage that contribution. Now on Ramu,
let's come down to Ramu Street. What are we looking at?
Ramu Street's great because it's a high yielding one. Again, I know for the next 5 years I probably won't see a lot of capital growth for any out of that one, but it doesn't matter because it's generating a cash flow, even though it's a growth property. So when those interest rates get back down to a more normal level, it's generating, let's say in year 7, it's generating $10,000 a year. Well, that's $10,000 I can put towards another property.
And is that the way that you're going to afford some of these contributions here? Do you have properties now that are giving you positive cash flow that you're then just going to use that to cover this?
Absolutely.
Because
plus also remember, I've got some of my old properties for sale at the moment. What I plan on doing with some of that money is keeping it in the bank to manage those contributions when interest rates are higher.
And look, I know in our book, Wealth Plan, we talk about the way you should set up your bank accounts is you have one bank account per entity. So if you've got 10 properties in a trust, you have one bank account for the trust, all the money comes in, all the expense or all the rent comes in, all the expenses go out, and then you've got to cover the difference. Is that the way that you manage it?
Yes.
As opposed to calculating, I need $50 for that property and $100 for that property.
No, I don't do that. I used to because I used to have to monitor my cash flow a lot better than I had to do today because as time goes on, rents go up and your mortgage stays the same. So it doesn't matter as much anymore. I don't have to worry it to the last dollar. But once a month, I'll go in and check that, the right money's in the right area.
I still can't believe that you don't have some sort of process for figuring out what you're going to buy and what you're not.
Well, remember, my process is what's right for an investor, the business is based on what is right for someone like me, someone looking for as much growth as possible in a 10 to 15 year period. So I've already vetted any property that I'm looking at here. Here's the thing. There is no secret sauce to buying investment property. The secret sauce is hold for a really long time, make sure it's sustainable, just buy something. Because I meet so many intelligent people that sit on their hands and they worry about higher interest rates or higher vacancy, or they worry about people moving overseas, or they worry about all sorts of things. All these excuses mean that they don't buy a property. I've been successful in property because I just do it. I buy and then I forget about it. Then I buy and I forget about it.
And so that's how you've settled 5 this year and probably 4 under contract in 2022. How many are you going to buy in 2023?
Don't know. Probably. I think next year is going to be a great year to buy properties because you might buy something next year that doesn't settle for 12 months. We're going to be hopefully on the way down with interest rates at that stage. So I'm buying in a high interest rate environment, but I'm not actually having to borrow the money.
But ballpark, are we talking another
probably
4?
more? Yeah, I'd say more next year.
another 6, 8.
Let's see on the 26th of December next year.
Well, we'll have to record a podcast then talking about what you've bought in 2023. Right, we're going to wrap it up there, but please don't forget to rate, review, and subscribe to the Property Academy podcast. Really helps us get the message out to more people. And hey, if you want to watch the YouTube version of what we've just talked about and you're currently on the podcast, whip out your phone, head over and actually just Google it. Opus Partners YouTube. There's about 4,500 subscribers there. I'd love for you to be the 4,501th or 4,501st subscriber.
Coming to you from New Zealand's top economist.
No, not New Zealand's top.
Sorry.
Maybe top 20. No, highly doubt that. There's a lot of smart people at Treasury. Yep, whip out your phone, Opus Partners YouTube. You'll be able to subscribe there. Thanks for listening to the Property Academy podcast. I'm your host, Tim McKnight. And we're going to be back again tomorrow with even more daily strategies, tactics, and insights to help you get the most. Until next time.